Good afternoon and welcome to BizTech's Asian Midday Market Watch. Jeffrey Halley, independent media analyst, joins us as our guest today. Jeff, as always, great to have you on the show, but today as our guest.
Yeah, it's wonderful. It sort of feels like we're interviewing ourselves, but I'll try and do my best for you, Ryan.
Now, before we get insights, I'm going to take a look and see how markets across the region have performed. We're going to start with the SGX, which is up 0.53%. And then if we look at the rest of the region, and I'm just going to pull that up right now. We have the KLCI, which is down 0.2%. Shanghai, which is up 0.07%. The ASX All Ordinaries is up 0.43%. The Nikkei has another good day. It's up 1.78%. The Hang Seng is up 1.41%. Rounding up the numbers, we've got the Kospi, which is up 0.15%. Now, Jeff, your view on market performance in the first half of the day?
It seems to be carrying on the general momentum that we saw from the US overnight. The buy everything trade, as I call it, seems to have returned again. Markets seem to be pricing in a fairly benign CPI/inflation print from the US tonight, which is going to be the data highlight for the week, I think. And unless we see a major surprise there, I expect that this upward momentum because of this Fed easing trade will continue.
Now, what we've also had is the SEC permitting crypto ETFs overnight. Now, what's your view on this? And it seems to be skewed primarily only to Bitcoin, which is the fine print that nobody seems to get.
Yeah, it's only Bitcoin ETFs at this stage, and I need to make that one very clear. I actually read the SEC statement, and the general tone was the whole thing had been released under gritted teeth. They lost a court case against an exchange-traded trust, I think, by Grayscale, I believe last year, and the courts in the US referred that back to the commission basically to have another look at the whole idea of crypto ETFs, and so through gritted teeth, they said they're allowing, I think it's about 10 participants to release individual ETFs on Bitcoin. Look, we saw Bitcoin rally briefly above 47,000 last night before it retreated back towards 46,000. Pretty volatile. That suggests to me that most of the good news is in that trade at the moment. Most of that news is built into it, and they're going to be US dollar and US inflation watching tonight as well.
Now, the big news today is also the Nikkei bridging the 35,000 mark, and that's the first time that that's happened since February 1990. So, Jeff, you and I are old enough to remember those days, the go-go days where Japan was going to rule the world. What's your take on this? What's fueling this rally in Japan, and is it sustainable?
Oh, I do miss the 90s. You've got me all nostalgic there, Brian. Look, I believe there's a couple of factors at play here. There's an expectation increasingly in the market that the Bank of Japan is going to finally bring an end to its zero interest or negative interest rate policy, possibly as soon as sort of April of this year. But the main reason I think that we're seeing momentum at the moment, apart from the general sort of momentum in stocks as we see it, is that the yen has been quite weak. So as the interest rate differential narrows between the US and Japanese interest rates, that is usually a positive for the yen. But actually what we're seeing here is a period of sustained weakness from the yen. So that suggests to me that it was a very crowded trade that people are still unwinding. But I believe that it's definitely to do with yen weakness at the moment. That's what's giving the short-term upper momentum to the Nikkei 225.
Now, finally, Jeff, where I'm at, Malaysia and the KLSC has been on a rally since the start of the year. Now, this is a market, Bursa Malaysia has underperformed across the region since 2012. So what's fueling the optimism around Malaysia?
I almost wish we had David Kuro here. We'd spend hours talking about this. Look, Malaysia's up 3.6% this year. It's one of the best performing stock markets in the region. One of the reasons could be that it was one of the most unloved stock markets last year, and there's a lot of bargain hunting. There's some great dividend stocks amongst that index, and the general outlook in Malaysia is for improved corporate earnings this year. They're definitely taking a tailwind from the expectations of Fed easing coming up possibly as soon as the middle of the year. The ringgit itself is extremely sensitive to US interest rates as well. Additionally, what we've just seen is Singapore and Malaysia finally signing an agreement to develop a free trade zone in Johor Bahru province, which adjoins Singapore. They also, I think, laid the last piece of a new railway joining the two of them either yesterday or today as well. This free trade zone has been talked about for years, and everybody who lives in Singapore knows about the need for Singapore to have an overflow because of the land scarcity and its impact on prices there. We're looking like we're starting to see some solid progress on that front now, and I think this would also be a medium to long-term tailwind for Malaysian equities as well.
Now, on that note, Jeff, thank you very much for your insights, and thanks for coming on the show.
A pleasure.
Now, we've been speaking to Jeffrey Halley, independent analyst, and this has been BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out the show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.